I'm Jono. Wise versus Payoneer. Let's see where the fees hide.
Two platforms built to move money across borders. One shows you the mid-market exchange rate and charges a transparent fee beside it. The other is already integrated into the payout system of the marketplace you work through. Wise and Payoneer. Both freeze accounts. Both generate community threads describing funds held for months with no clear path to resolution. The difference is why the freeze happens and who it hurts most. Wise freezes accounts because financial regulators require identity and source of funds verification that the platform's compliance systems cannot process for users with non-standard financial lives. Payoneer freezes accounts through verification loops that reject documents repeatedly without explaining what is wrong or how to fix it. One is a regulatory architecture problem, the other is an operational support problem, and the users caught by both are the same freelancers and international workers that both platforms market to. Wise's case rests on a single principle that every other platform in this comparison violates. When you send money internationally through a bank, the bank gives you an exchange rate that is worse than the actual mid-market rate. The difference between what the bank charges and the real rate is a fee that never appears on any statement. Wise uses the mid-market rate, the same rate displayed by currency conversion websites, and charges a separate fee that is shown before the transfer is confirmed. On a 10,000 transfer, the gap between a typical bank markup and Wise's transparent fee can be 200 or more. On larger amounts, the savings reach into the thousands. But the pricing transparency extends into a product designed for people whose financial lives cross borders permanently. 40 currencies held in a single account. Local bank details in 22 of those currencies, meaning a freelancer in one country can receive payment from a client in another, as if they had a local bank account there. A debit card that spends at the mid-market rate. Revenue in fiscal 2025 reached approximately £1.65 billion across 15.6 million users in 160 countries. The company went public through a direct listing on the London Stock Exchange in 2021, a method that avoids the intermediary costs of a traditional offering. In mid-2025, shareholders approved moving the primary listing to a United States exchange. Wise is regulated by the United Kingdom's Financial Conduct Authority, and the compliance requirements that authority imposes are the source of both the platform's legitimacy and its most painful failure mode. Payoneer's case rests on a different kind of infrastructure. Over 2,000 marketplaces have built Payoneer into their payout systems natively. When a freelancer on one of the major freelancing platforms selects a withdrawal method, Payoneer appears as a default option. The freelancer does not choose it because the exchange rate is transparent. They choose it because the marketplace already integrated it, and the alternative withdrawal methods are slower or more expensive for the specific corridor they need. Payoneer was founded in 2005 by Yuval Tal to democratize access to global commerce. The company went public through a merger with a special purpose acquisition vehicle in June 2021, listing as a publicly traded company at approximately $3.3 billion. The marketplace lock-in is what makes Payoneer's complaint record different from Wise's. Wise users can leave if the compliance process frustrates them. They lose the mid-market rate, but they can use a bank or PayPal instead. Payoneer users often cannot leave because the marketplace they depend on for income has Payoneer as the primary or only integrated payout method. A freelancer in an emerging market receiving payment through a platform that integrates Payoneer natively does not have a comparable backup if the account is frozen. Revenue in fiscal 2025 reached approximately $1.05 billion. The Capital Advance product offers working capital financing secured against historical payment volume, with limits reaching up to $750,000 for eligible commercial marketplace sellers. Free transfers between accounts on the platform add utility for businesses paying contractors who also use the service. The product has genuine strengths. The problem is that the users who need those strengths most are the users with the fewest alternatives when things go wrong. The direct comparison between Wise and Payoneer on pricing is not close. Wise uses the mid-market rate with a transparent percentage fee. Payoneer charges a receiving fee of up to 1% on incoming funds and converts currency at a proprietary rate that ranges from 0.5% to 3.5% depending on the corridor. On a 10,000 international transfer, the total cost through Wise is typically lower than the total cost through Payoneer by a meaningful margin. Wise discloses the exact cost before the transfer is confirmed. Payoneer's total cost requires the user to calculate the gap between its conversion rate and the mid-market rate, a calculation the platform does not perform for them. However, pricing is not the only comparison that matters when the marketplace determines your payout method. Wise does not have native integration into the payout systems of 2,000 platforms. If the marketplace a freelancer works through offers Payoneer as a withdrawal method and does not offer Wise, the pricing comparison is theoretical. Payoneer also charges an annual fee of just under 30 to accounts that receive less than 6,000 in a 12-month period. Wise does not charge an inactivity fee. The account freeze comparison reveals different failure modes with similar consequences. Wise's freezes come from a regulated compliance architecture that requires identity and source of funds verification. The regulations are legitimate. The systems implementing them are not designed for digital nomads without fixed addresses, dependent pass holders without recognized income categories, or freelancers whose documentation varies by country. Payoneer's freezes come from verification loops, where documents are rejected repeatedly without clear explanation, and from automated cascade systems that can freeze linked accounts simultaneously. Wise's problem is a system that cannot categorize legitimate users. Payoneer's problem is a system that cannot process legitimate documents. If you have a choice between Wise and Payoneer for moving money internationally, Wise is the stronger product on pricing, transparency, and the breadth of its multi-currency account. The mid-market rate with a visible fee is cheaper on almost every corridor. The 40-currency account with local bank details in 22 currencies provides holding, receiving, and spending functionality that Payoneer does not match in scope or cost. The compliance risk is real, and it scales with the complexity of your financial situation, but the product delivers what it promises when the compliance system can process your documentation. If the marketplace you work through integrates Payoneer natively and does not offer Wise as a comparable withdrawal option, Payoneer serves that function. The marketplace integration is the product. The capital advance is a genuine differentiator for sellers who need working capital without a traditional banking relationship. The platform reaches users in markets where alternatives are limited, and for those users, the question is not which platform is better, it is which platform is available. The honest answer for international freelancers who have a choice is to use Wise for transfers and currency holding, and to use Payoneer only when the marketplace requires it. Withdraw from both platforms to a bank account as soon as funds clear. Do not hold meaningful balances on either. Keep records of every document either platform might request, because both can and do freeze accounts of users with entirely legitimate financial profiles. The pricing difference favors Wise. The marketplace integration favors Payoneer. And the risk of losing access to your money for weeks or months exists on both, for different reasons, with the same consequence. The platform that charges you less and the platform that your marketplace chose for you are both capable of holding your income beyond the point where it matters.